Good morning, traders and investors. Welcome to the second day of February. Pre-market prep with StockOdds. Joel Elconin joined by Rob Friesen. S&P's bumping up against the high of the day, 41.91. We have cleared the December 13th high. I think I saw a daily high closer to 42.06. I'll have to double check that for you. The buck is rebound off the lows. It's not bothering the market. It's up 59.7 cents at 101.63. Bonds all over the place, but now they're up a little over a half a point, 132 and 8/30 seconds. Crude in the red, 47 cents, 75.94. Gold 34 bucks off its high of 1975.20, down a $1.50, 1941.20. And Bitcoin futures, they're hanging in there. They're up $225 at 23,980. Let me stop it. The screen share. We'll bring in Rob Friesen. Rob, how you doing on this Groundhog Day?
Yeah, like we've been here before.
December 13th.
A lot of things are bothering me today. Lots and lots of things.
Really, get it off your chest. Let's be healers for you.
You're such a good therapist. No, I just this whole thing just like we've been here before. Now, I should preface this. So, as a trader, you have to be very diligent with separating what the market's doing, what the market wants to do, as in sentiment, and your own opinions, observations, biases, things like that. So you hold your biases loosely and you respect price action, you respect what the market's doing, because look, we can climb walls of worry. We can go the opposite of what everybody expects. We know the market wants to prove lots of people wrong most of the time. So you don't ever want to, have a stubborn opinion that causes you to fight the grain and lose money, right? So you have to hold everything in balance. It's a very interesting industry that we've chosen, or a career, right, Joel? I mean, to have to process lots of information, have to form opinions and biases, which kind of are necessary sometimes to get you situated in the things ahead of time, like for example, buying Peloton when nobody wanted it, and getting the rally after that, right, Joel? Things like that. So but it's a matter of having a really healthy balance. And I can't say that the government's balance sheet is healthy, though, can I? So there's a lot of things that are bothering me. So yesterday in Powell's meeting, he said something that disturbed me greatly, and that was more than just the longer he talked, sort of the more dovish he became. More than that, it was the statement about what was risky relative to the Congress not raising the debt ceiling limit, right? So that bothered me a lot, that whole statement, and it actually added some further fuel to the rally. So it's like he's also woke now, right? So this is a whole area that we're really concerned about, and I don't think it's his place to have made that statement, and I don't think it's his place to endorse sort of the abandonment of a debt ceiling, or just to carte blanche. Let's forget. Let's just print money, pay the bills, blah blah blah. Right. So anyway, what's the future hold for fiscal responsibility? Not much. So that's part of it. Another part of it is, have we been here before, Groundhog Day, where the market's kind of doing, say, the opposite of what it probably should be doing, in terms of, like, maybe we've already entered a recession in a lot of areas, and we're already it's already in play, versus we're expecting it to come in the future, and it probably won't, according to the conversations that we heard yesterday. Is that we're going to be able to deal with inflation just fine. We're going to get it back to our target, and we're not going to harm the economy or unemployment when we do so. So that's a concern as well. So there's a lot of indicators that are kind of flashing amber lights, red lights, things like that are sort of against that narrative. And I think we need to be mindful of it, because the tendency for market participants is to really weight what is happening. So I'll share my screen here. I know Joel showed the charts already, but I like my pretty candles. I don't care for all the indicators and stuff down here. I'm more interested in how many times has an indicator been hit, and then what has happened subsequently from that. That's more of my interest, which is where StockOdds comes into play, is what happens next, rather than what a particular number or indicator is at. But where we've got an air pocket, right, Joel? We've got an air pocket here. And we've got some, like you said, well, what's the next level? Yeah, we've got some numbers up here and some numbers up here. So we've got some targets, and we could certainly go there. And again, this is part of this healthy balance about letting the market do what it wants to do and not arguing with it, but also looking at the big picture in terms of, have we had situations like this where we shrugged off things, we climbed the wall of worry, we disregarded things, we were hopeful, we were optimistic, and then we get blindsided by the next thing that comes along. So going over to the monthly, we had a long period of time of very low volatility. 2020 obviously entered the COVID volatility period. We climbed all the way back, and we kind of had an idea that it would go back and maybe test this high that we had. It almost got there on the SPY anyway, and now we're bouncing back up. So is it clear sailing all the way back to these highs, or are we going to be facing, if I was to draw this out, are we going to be facing this sideways for many years to come, never reaching these highs again? Or worse, are we going to, kind of have a 50% retracement of that move down and then roll back over and then go much lower? So these are all kinds of scenarios that can play out. But my point is, I think that there are things that are being disregarded, and there are narratives that are very sort of rosy and optimistic. And there's just a lot of those things bothering me right now. And again, you have to respect, just like yesterday, as soon as the testimony started, well, we dipped, just when it first started, we dipped down right away, and then we started to rally. But as the statements kept coming out, I mean, it just added fuel to this, and we had a really substantial rally. I'm not going to argue with that signal to noise ratio. I'm not going to step in front of that and say it has to go back down. And that's not what you do as a trader. You respect price action. You look at signal to noise ratio, but you also look for potential mean reversion, or you put your ear on the railroad track and listen for the train well before you ever see the train. And I think there's a need to do that. I think people should really roll up their sleeves and do their digging and kind of prepare for an event that's sort of not really expected, a surprise, And some of those are very rewarding, right? I remember talking with one of my traders, it was in January, just after, the first COVID. I think the first person was in Seattle or something, and then it kind of went to the East Coast and all and on. But we got to talking, and we said, the market seems to be shrugging this off, and like this isn't a big concern. And we took an approach that this could be quite disruptive, and sure enough, it was. And then the next conversation I had with him was about what this means in terms of inflation, and that was I think in March or April of, I think it was third week of March of 2020, just after the March 13th sort of lockdown started to come into play. And yeah, we were talking about how impactful inflation would be and what it could affect, again, way before it ever became part of the conversation in, say, September, October of 2021. But this is what you have to do. You have to run the scenarios. You have to talk about things that aren't being talked about. So I just wanted to say, like, there's a lot of things bothering me. So I encourage you, if you feel the same, is to dig into it, run scenarios, get prepared, because I don't think it's just let's have clear blue skies all the way back to the highs that we came down from at the beginning of 2022. Okay.
Well, I mean, I don't think you have to even look any farther until after the close today, right? You have Apple, Amazon, and Google. I mean, there's no guarantee.
Well, and then you got further numbers tomorrow, stuff like that. So, I mean, this is a big week, and it's a big earnings week too, and we've got to digest all these things. And it's I don't know. I just
with the flow, right?
I mean, you just feel the questions constantly coming up, right? No different than we've seen a lot of these narratives over the last few years. It's like, when it's the consensus, and very little alternative thinking going on, usually there's a surprise around the corner. So
okay, well, we'll keep an eye out for that. S&P's just made a high at 96.75. I just looked at my September 13th high to give you guys another target on the upside. That's 42.06. Back in September, we hit that level. It seems like the 13th of like the middle of the month is when we peaked in September and December. Facebook is ripping, leading the market higher, way above the pre-market high. So there's your driver. We'll be back with you after the big numbers tonight, jobs number tomorrow, and we'll finish up the week tomorrow, same time, same place. Thanks for joining us here, Pre-Market Prep with StockOdds.